Well, friends, Virender Rana here. So, product of the day is marine cargo insurance. Marine cargo insurance. See, this insurance is specifically designed to cover loss or damage or destruction due to any fortuitous cause when goods are in transit through any mode of conveyance, for example, rail, road, air, postal courier, and or combination of the above mode of conveyance. So the need of marine cargo insurance arises because to avoid the uncertainty of recovery from carriers, importers and exporters are exposed to countless financial risks when they don't insure their international shipments. So trying to recover losses from carriers is difficult and time consuming. So the worst way to protect their financial interest is with marine insurance coverage, which relieves them of their financial exposure from physical loss or damage to their goods while in transit, since the carriers have limited liability. So the insurance of goods by different mode of transits like road, rail, air, sea, courier, registered post, or the combination of our modes of transits. Then duration clause is most important in marine cargo insurance, because this insurance attaches from the time the goods leave the warehouse or places of storage at the place named therein for the commencement of the transit, continues during the ordinary course of transit, and terminates either on delivery to the consignees or other final warehouses or place of sabotage at the destination, place of storage at the destination named, or whichever occurs first. So this duration depends upon the mode of transit. Say for example, it is by road. In that case, 7 days of arrival at destination or station. If it is by air, and 30 days of unloading at destination or airport. In case by sea, 60 days after discharge from ship, and by port, 15 days of notice of arrival or parcel. The types of marine cargo policy is important from the selection point of view, because there are policies which are known as the specific voyage, that is inland or import or export policy, then open policy for inland cover, and open cover for import and export. So the specific voyage insurance means this policy is valid for a single voyage or transit. So the policy will be issued before the voyage starts. The coverage will cease immediately on completion of the voyage. The transit can be inland, within the country, import or export. Open policy means for inland insurance. So this policy is issued for transit of goods within India. Policy is valid for 1 year, and all transits during the policy period and are declared automatically covered by the insurance company, subject to the availability of the overall sum insured. It's a stamped document. In this case, specific policies are not issued for each consignment. Premium can be collected in advance for the entire estimated value during the policy period. Stamp duty is collected in advance along with premium for dispatches to be declared periodically. Then open cover, that is used for import and exports. So the open cover is usually issued for import and export. This cover is a contract effected for a period of 12 months, whereby the insurance company agrees to provide insurance cover to all shipments coming within the scope of the open cover. Open cover is not a policy. It is an unstamped agreement. As and when shipments are declared, specific policies are issued as evidence of the contract and on collection of the premium. So considerations for the marine cargo insurers are insured and consignee, nature of cargo, nature of packing, voyage, that is route, annual turnover, per transit limit, season or duration, coverage, terms of sale, insurance or claim history, other terms and conditions like access, franchise, warranty, etc., countries, routes of transit. These are all important considerations. There are various cargo clauses. First one is inland transit clauses. They are known as A, B and C clauses. A clause says physical loss or damage to the subject matter insured caused by fire, lightning, breakage of bridges, collision with or by the carrying vehicle, overturning of the carrying vehicle, derailment or accident of light nature to the carrying railway wagon vehicle, any other risk not specifically excluded in the policy of the clause. Then the clause B says physical loss or damage to the subject matter insured caused by fire, lightning, breakage of bridges, collision with or by the carrying vehicle, overturning of the carrying vehicle, derailment or accidents of like nature to the carrying railway wagons or vehicles. And the clause C covered the loss or damage to the subject matter only by fire and lightning. Then there are institute cargo clauses. They are also A, B and C. These clauses includes clause A is the widest one. It includes loss or damage to the subject matter insured reasonably attributable to caused by fire or explosion, vessel or craft being stranded, grounded, sunk or capsized, overturning or derailment of land conveyance, collision or contact of vessel, craft or conveyance with any external object, discharge of cargo at a port of distress, general average sacrifice, jettison, general average and salvage charges, both to blame clause, washing overboard, earthquake, volcanic eruptions or lightning, entry of sea, lake or river water into vessel, craft or container, total loss of any package lost overboard or dropped while loading and unloading, any other risk not specifically excluded in the policy or the clause. So exclusion extra malicious damage under B and C, deliberate damage to or deliberate destruction of the subject matter insured or any part thereof. Then comes the clause B. This is a little shorter than this clause A, because this covers risk of fire, explosion, vessel or craft being stranded, grounded, sunk and capsized, overturning or derailment of land and conveyance, collision or contact of vessel, craft, discharge of cargo at a port of distress, general average sacrifice, jettison, general average and salvage charges, both to blame clause, washing overboard, earthquake, volcanic eruptions or lightning, entry of sea, lake or river water into vessel, craft, whole container. Then comes clause C, loss or damage to the subject matter insured reasonably attributable to fire or explosion, vessel or craft being stranded, grounded, sunken, capsized, overturning or derailment of the land conveyance, collision or contact of vessel, craft or conveyance with any external object, discharge of cargo at a port of distress, general average sacrifice, jettison, general average and salvage charges. Then there are additional covers like war, SRCC, that is struck right and civil cohesion, and loading or unloading. Terms of sale depends upon the or governed by the Incoterms, which are internationally accepted terms of purchase and sale, whereby the responsibility in the goods freight and insurance is fixed at different stages of transit. These terms form the basis of marine insurance and helps in identifying the insurable interest in the goods cargo at the time of loss. So Incoterms will decide the terms of sale. So this is all about the marine cargo insurance. Thank you very much.